In recent days, Apple has found itself at the center of significant news stories. US President Donald Trump has threatened to impose a 25% tariff on all iPhones imported into the US unless Apple moves production to the United States. This has reignited trade war fears and highlighted Apple's vulnerability, as most iPhones are assembled in China. The market has reacted nervously, with Apple's stock under pressure, down roughly 20% year-to-date. This decline has been partly attributed to these tariff threats and other external challenges, prompting speculation about whether 2025 could be a major test for CEO Tim Cook. There is anticipation building for Apple's upcoming Worldwide Developers Conference on June 9th. However, expectations are tempered, as major outlets suggest Apple may have less to show on the AI front compared to rivals. Bloomberg has remarked that Apple is still far from being an AI leader. On the product front, Apple is offering iPhone trade-in incentives in China to boost demand. The company is reportedly planning to launch smart AR glasses in 2026, aiming to diversify its product lineup after the mixed reception of last year's Vision Pro headset. At the upcoming WWDC, Apple is expected to announce new AI development tools, including a software kit for third-party developers to build features using Apple's AI platform. Apple is also focusing on supply chain diversification, shifting more production to India to reduce reliance on China. Foxconn is investing $1.5 billion to expand its India operations, aligning with Apple's strategy to mitigate geopolitical and tariff risks. However, President Trump has urged Apple to move production to the US, highlighting the company's balancing act between cost-efficient global manufacturing and rising protectionist pressures. Analysts have offered mixed commentary on Apple's challenges and long-term fundamentals. CFRA research notes that tariffs and supply chain risks are primary concerns for Apple stock. Main Street Research points out that Apple's recent stock decline is partly due to a lack of recent, game-changing products. Meanwhile, Goldman Sachs remains bullish on Apple's long-term fundamentals, reiterating a buy rating and highlighting the durability of Apple's revenue and product ecosystem. UBS takes a more cautious stance, but suggests that even in a worst-case tariff scenario, Apple's profitability could withstand the impact. Apple faces heightened legal and regulatory scrutiny worldwide. In the US, the Department of Justice is investigating Apple's App Store practices for potential antitrust violations. A federal judge recently ruled that Apple willfully violated a court injunction related to the Epic Games lawsuit, leading to a possible criminal contempt investigation. In Europe, Apple has been fined €500 million under the EU's Digital Markets Act for anti-competitive App Store rules. Apple is appealing this decision, arguing that the DMA's mandates pose privacy and security risks. In Texas, a new law will require Apple to verify the age of users on its App Store and obtain parental consent for users under 18. Apple opposed this bill, citing privacy concerns, but the law will take effect in January 2026. In the broader market context, big tech stocks have been on an upswing, with enthusiasm for AI driving growth for many of Apple's peers. However, Apple stock is down 20% in 2025, partly due to its hardware-centric profile in a market currently rewarding AI and high-growth stories. In China, Apple faces fierce competition from local rivals like Huawei, which leads the market with innovative features and aggressive pricing. Despite these challenges, Apple remains a hugely profitable company with an unparalleled ecosystem. The company emphasizes innovation and long-term fundamentals over short-term stock moves. As Apple navigates this turbulent period, its strategic developments in silicon, AR, AI, and its ability to adapt to regulatory regimes will be key in determining its trajectory in the months and years ahead.